Good morning, everybody. Happy Friday, TGIF. Welcome to Pre-Market Prep. Big day today. We got earnings. We got a jobs number. A lot to talk about. Quick reminder, if you're in the YouTube chat, we turned on subscriber-only mode for Subscriber Friday. So if you want to play in the chat with us and drop us stickers for us to look at, just subscribe to Benzinga on YouTube. That's all you got to do. It's that simple. All right, let's start the show. Let's bring on Joel, Dennis, and let's do our thing here. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. What's up, everybody? How we doing this morning?
Doing well. Is that a little Motown at the end of that introduction, or you don't know?
Could be.
Sounds like a little Aretha Franklin, maybe.
Could be.
Maybe
Anyway,
from that one.
good morning, guys. Good morning, Joel. Good morning, Dennis. Good morning, everyone in chat. I guess we just start off with the overall market here because it's. I wrote all's quiet on the futures front because it is quiet, is it not, Joel?
Yeah, chop and slop, a decent range. We can talk about the part of the range that Dennis missed last night. But the S&P futures are up 5 handles, 80.75.
Show us your charts.
Is that a song?
I just made it up.
Okay. All
Okay.
right. Sorry about that. I'm just so busy cracking up at your introduction. You just got so much energy. Anyways, chop and slop up 5 handles. Let's take out yesterday's high. Let's get in a 4,600 handle and let's just forget about this week and forget about all the nonsense this market did by going down. Crude, big rebound. We're $6 off that low yesterday in the 62 handle, up a buck 79. 68.29. Gold in the green by $10 at 17.73. Silver going to the same way, up just 6 cents at 22.38. Bitcoin, now I'm telling you, Dennis, I know you didn't like that chart yesterday. Boy, it's sleepy. I don't know. Is it time to do a little, little straddle or strangle here? 55 to 60. It's not going to stay here forever. Ethereum still strong. That's up $76.75 at 46.20. Still hanging on to half of that rebound in Ethereum. So Triple D, number one. How you feeling?
Not great. I'm trying. This has been a vicious cold. I hopefully get the test results for my COVID test today. They said probably later tonight because it's usually 48-hour turnaround, but they said they usually sometimes come sooner than that. So I'm 4 days now on this one. I obviously took 1 day off and trying to fight it. I'm obviously trading still, but not feeling great.
Fever?
Yeah, it's a slight, but I haven't had a fever in 30 years, I'll tell you. Like, I never get a fever. So
Congestion.
very congested.
Achiness.
And just like achy and weak.
Yeah, shivering, all that stuff. Flu. But that's the signs of COVID too. So that's why I went for the COVID test, and we'll see. But like I said, it's been running through my family, my extended family, and none of them, when they went for the COVID test, had COVID. So I'm assuming it's just the same flu bug that they had. But just to be sure, I went and got the COVID test. So we'll find out later.
Yeah,
today.
I know I'm not a doctor, but I'm married to one, so I can make simple diagnoses. And
That's definitely how it works. Yeah.
Yeah, that's
For
how it
sure.
works. Yeah. I don't. It's a coin flip. It really is. I don't know. I don't know what you were at that water park, right? And obviously you don't wear a
Yeah, I went
mask
to a
at a water.
hotel. You can pick
Yeah.
stuff up there. I mean,
Yeah.
I'm the person. That's the first place I've really went, public, because I've obviously been scared of it.
Camping trip.
Yeah, but
That
that's
doesn't
outside. But I mean, the
count.
first, like, I'm in a hotel, staying in a hotel for a few days with other people. You got to live, right? Like, we've been,
I agree.
in lockdown ourselves basically for a year, trying, obviously, because, my boy's got asthma, my daughter's got asthma. We've been trying to protect ourselves, but you can't just stay like that forever. So we were trying to live on the edge a bit. And apparently, I got punished for it with at least a flu bug, and I hope it's not COVID, but we will find out.
You got punished twice. You've gone away twice now. You did the
And I
camping,
got sick. I did.
and you got sick both times.
Yeah, I did. I got sick off of the family mostly off of the camping trip too. Outside camping trip,
Oh,
sick.
man.
Crazy, eh?
Hey, what are the odds?
Well,
Anyway, okay. Let's go to the market here. I guess we'll just start. I know Joel's thoughts, but Dennis, what are your thoughts on yesterday's action? We had a little bit of a bounce.
I mean,
Curious how you played it.
and we bounced right off the previous day's low in SPY. Bring up your SPY chart. I know Joel likes his S&P futures, but a lot of people just look at the SPY. I just look at the SPY because I don't want to pay the $700 a month for the S&P futures quotes. Yes, because I'm professional, they charge me a different rate, and that's what they want to charge me. So I'm like, screw it. 5 years ago, I'll just use SPY. 450.29, 450.31, the lows from the previous 2 days. So those coincide perfectly with each other. And we talk about when you don't breach the previous day's low, those can be signs for turnaround. I don't think it's a coincidence that people started looking at that and then started buying. You actually started with a little Kathy rally early in the morning where the growth stocks started to, probably oversold, started to rally. That gave that back in the later in the day, and then obviously they rotated into the value, which we thought they might. So stocks like General Motors, the value stocks, where they had been working before, those are the ones you want to buy on dips. That's what was working yesterday. So we saw a serious rally into value. I think the value rally continues.
Wow. Yeah, that's not a very hot take because we were as we were saying at the close yesterday, it takes more than 1 day, right?
Yeah.
Yeah. So
I mean, we're going to be choppy. The one thing I will say is this is not the market environment that you need to chase in. If you're coming out and you're chasing moves and you got to be in it and you're doing it backwards. This is not the market to chase. This is a fading market. What's that mean? Again, buying dips, selling rips, or selling short rips and buying dips. I mean, that has been working here. I think that trade continues. So if you're coming in and you're buying now, we're going to get a big jobs number. Maybe it continues higher. It's good news for the market that SPY did not breach its previous day's low and bounced right off of that. And it was a broad-based rally. There was still some stocks like Zoom that just go down every single day no matter what. But there was a lot of stocks that really ripped higher. We talked Cleveland Cliffs on the show. That actually, well, that didn't have that. But some of the commodity stocks, well, actually, I'm starting to look at a few. The oil stocks really, had a nice bounce. So I know I was looking. I went to Cleveland Cliffs. It's like, well, that was up, but it didn't really close up. And then I was going down. U.S. Steel, well, that didn't really either. And we got new core news this morning. So, I mean, I think you're buying value on dips. I think if you're so inclined to get in there, I think you got to stay away from all those growthy names. I think they still continue to not work because they're simply all overvalued, and this market is starting to care a little bit about value. It might go back. Like, I'm not saying these stocks can't come back into favor, but I don't see any signs that that is turning anytime soon.
Yeah. Sorry, good, Joe. Go ahead.
Yeah, I was just going to say, what was the culprit in? I mean, no, SPOOs are up and down and all around, but what was the big negative catalyst yesterday in the market? Like the hottest stock that had a negative catalyst. What stock was that?
Apple.
Apple. Do you see what Apple did?
We did. We did.
Yeah.
Yes, we
There
did.
you go.
They bought
Look
the
at
dip
that.
on it again.
Yep.
They can't
Yep.
stop buying the dip on, and it's value tech. I mean, yeah, I can say, oh, it's trading 30 times, but I mean,
No,
compared to some of these other ones,
Yesterday, no. Yesterday, you did not say that.
no, I'm not saying I said anything. I'm just saying it's value tech, and it's not surprising that they would buy that right back because that's what they've been buying.
I could have sworn yesterday you were like, Apple's not value, or maybe I imagined that. Did I imagine that?
I
Apple's
think you
not.
imagine that because if you're looking at tech,
All right.
anything that's trading 25, 30 times earnings in tech is value tech because you struggle to find tech stocks that are trading like 15 times earnings. They just aren't out there. So, you look at Microsoft, Google, I mean, they're trading Facebook, they're trading in that 20 to 30 range. If you can find the tech stocks that are trading at P's of 10, those could be attractive going forward. But those are hard to find. I mean, you get lots of stocks, commodity stocks trading P's of 6, banks trading P's of 9. But to find a tech stock trading under 20 PE, unless it's really struggling, meaning like it's actually going, it's tough to find those stocks.
All right, let's go to some away from quote unquote value tech into
Sure.
the growthy tech here. Hey, it's not every day where I pat myself on the back, but I'm going to do that this morning because as Alex,
I patted you. I'm the one that called it out. You
all
didn't.
right,
You didn't.
thank
You
you.
didn't call yourself.
If you weren't watching our At the Close show, which Joe and I do every day from 3:30 to 4,
I don't know what you're doing with your life.
if you
Go
weren't
ahead.
watching that, here is what you missed.
I'm also cosplaying as the investor relations team for Asana and Docusign because they both report earnings tonight, and I don't even think it matters what they say because it's probably gonna be bad.
Wow. The baseball bat too. I love the baseball bat. You're ready to clobber some stocks, and
Oh,
you
wait.
did.
Wait, where is the bat? Now,
You clobbered some stocks there. Holy mackerel. That's one of the best calls we've seen. Docusign just absolutely assassinated. It's down 74 points, down 31%. Asana, same story, down 15% from bliss to piss. These stocks are just awful now. Great call, Mr. Israel.
I mean,
Um,
it was the most obvious thing in the
you
world.
know, obvious, but you know what? This market does not position itself for the obvious. Take case in point last night, New York. Oh, we have cases
You're right.
of Omicron in New York. Sell everything.
You're right.
Nobody could possibly have anticipated that it could be even remotely possible that Omicron would eventually get to New York. How can you anticipate anything like this? And Zero Hedge was one that said that, but I was thinking the same thing, Zero Hedge. I mean, this is the market. It's simplicity. It's the obvious is not priced in. And you know what? Zoom, or obviously, we've seen Zoom, we've seen a lot of the Pelotons, and now you get DocuSign. I mean, you're right. That was an obvious call. The obvious call, if you would have put that trade on, Mr. Israel, down 31% in one day. You'd make 31% just from doing the obvious. This market prices in none of the obvious.
Yeah, and just to
And
give you,
that's a good thing for traders. You can make money just using logic right now.
and just to give you, the actual numbers here, like again, DocuSign again, and if I'd played the video for longer, I also said like the numbers frankly are irrelevant because it was a fine quarter, right? They beat the EPS compared to the estimate. They made more money than the street was expecting in terms of sales, but their forward-looking guidance, their forward-looking numbers were light. And what the CEO said on the call was like, yeah, our consumer behavior kind of came back down to earth, right? We just had the best year of our lives, and now we're sort of on the downswing of that. And Asana said the exact same thing, right? Like the forward-looking numbers. And again, we all knew this was coming because every single stay-at-home play this entire earnings season said the exact same thing as Asana and DocuSign said last night. So
Yeah.
again, it's not even so much like the estimates are irrelevant. Irrelevant. They can because they beat, and it doesn't matter. All that matters is the growth rate is slowing down, and they said that, and we knew that was going to happen, and that's why Asana. Well, actually, Asana's not even down as much as Asana's down. What, like 10%, more than that now.
14.
15,
All right,
yeah,
15.
15.
Yeah, but let's put it in perspective. Asana hit a new
Oh,
all-time high at the beginning of November.
Yeah.
We just left November. Like in 3 weeks, Asana got cut in half. Man, you were getting punished for being long growth. I'll tell you that. If you're along these high P nosebleed multiples, you one haven't been listening to the show because we've been warning you about these stocks for a while here. But two, this is just reckoning day for everyone who has just said valuation doesn't matter, and it didn't matter for a long time. But just blindly investing in the growth story, blindly trading the growth story is fine. Get the hell out when trend breaks. Blindly long-term investing in the growth story, like when you're paying these ridiculous multiples, is a recipe to lose money. The recipe was shown back in 1999, 2000, and Kathy Woods learned that the hard way right now.
first of all, we were talking about this, and, and after the whooping that Asana took yesterday
Yeah.
in the ripping market, that thing like barely rallied and closed near the low of the session. So you could tell the street was just selling hand over fist on that one. It's I don't know why they had that blip up there on on the actual number. Let's see if we can find. We're trading just
I'll,
under
I'll tell you why.
75 is the
I'll tell you why.
pre-market low. 75 even is the pre-market low. What do we got on that? Is there anything on the monthlies here? Boom, boom. 74.18. I'm not leaning on one monthly low, but if you take out that 75, you do have a monthly low at 74.18. But the interesting chart too is this DocuSign because there's just no bounce. Look at this thing.
No
It's down
bounce.
$73. It's down
Yep.
30%. And they're just, I mean, someone says, okay, I'm going to buy 160 to 162. And I might buy more. I might pull my bid.
No bounce.
I have so 160 is going to be the swing number. And oh man, the next monthly low, holy macro, comes in at 131.20. Oh no, 170.80. There are my two numbers, 174 and 170.80. But They got to find a buyer here. There's
Yeah,
just
but we've seen this story this earnings season when the stocks are in
Yes.
downtrends and they get hammered,
They
they
don't
don't
come back.
bounce. They continue to leak. It's why I sold my Alibaba off of the bad report after 5 years. And look how good of a call that was for me to sell and take the loss in Alibaba at 148. And it was a 3-point loss, but I held it for 5 years, so it felt like a lot bigger loss than that. But 148, and it's been straight down every single day since. Take a look at the Alibaba chart. That is what your Docusign chart might look like. I'm not saying, anything can happen. Maybe we rally into growth. Maybe it all changes. But if I was betting, I would think that this continues to leak. And you know what? It's continued to leak all night. I think you're going to get some little rip and roaring rallies in there as well. I think those rallies are to be sold. It would not surprise me in the least if we look at Docusign in a month and it's at 130. It would not surprise me in the least.
So to Joel's point about the initial pop, I'll tell you why I think both these things actually got initial pops. It's because the algorithms are programmed to read the numbers compared to the estimates, and the estimates were lower. They beat the estimates. Asana and Docusign both came in above the estimates on EPS and on sales, and Asana actually came in above estimates on their guidance. But it's not. That is not what matters. It is year-over-year stuff that matters here, or the quarter-over-quarter stuff that matters here. And that's why they both got the pop. And I got to admit, even I'm surprised that I did not expect this in Docusign. I mean, 31%.
How could you just not, if you were long this thing with any substantial, size, how could you not just be layering on? I mean, I know, Dennis, you say, don't show
We
your
should have been
hand,
short
but
it. I don't
yeah.
short in the earnings reports typically. I'm a trader. I'm a short-term trader, but man, that setup was really nice. And Spencer with the baseball bat call, man.
You guys want another easy one this morning?
Yeah.
Monday, MNDY. This is just like Asana. It's a peer of Asana. It's actually trading higher this morning.
Did it report yet? When's the report?
Yeah, it reported like a month ago.
There's no catalyst though. What's the catalyst to drive?
Asana is the catalyst. Growth is the catalyst. Lack of it.
I don't like that setup as much as the Docusign one. I don't know anything about Monday.com either, though, other than it's a ridiculous name.
It is the same company as Asana. It's the same service. It's the same business.
Why is it trading up on the bad Asana report then?
I don't know. That's why I said it's an easy one.
Probably no volume.
I don't know if it's that.
There is no volume. Okay.
That's $300 stocks are thin. I get stopped out on all those things. And this is the market. You were talking about this in the pre-market show. This is the market you get stopped out on everything. So using stops in here is just like a recipe to lose money because it's so much chop. You get stopped out on everything. It's a tricky market to trade. I mean, from an inefficiency perspective, it's good. But we'll talk about some of those strategies obviously in another week when we do our third educational event. But from just a swing trading perspective, it's a tough market. Because you know what? You're trying to put on risk reward, and it's kind of murky. It's stopped out a lot of stuff.
All right, it's not all bad on the earnings front. We should be clear about that. And I know the chat's been all over this too. Marvell, MRVL, is trading up 10%, if not
22%.
Oh, sorry, 22% this morning.
Yeah.
On its earnings report last night. EPS came in higher, sales came in higher. Guidance was also strong for their EPS and their sales. They guided revenue growth for the quarter of around 9% year over year, led by 5G. What else did they say? I mean, I feel like the 5G play has actually been a good one here. If you just look at like the FIVG ETF, which I think I own. I don't even remember at this point. No, I own it. And that's actually held up okay. And so Marvell is in that basket and trading higher this morning off its earnings report. So 5G has actually been an okay trade here.
I'm still long it. I've been long the stock since 40. Still holding on. It's kind of value tech, to be honest, and it does have the growth story with it too. I love Marvell. I love this company. Kind of feels good when you don't own any of the ones that are going down 20-30% today, and you do own the one that's up 22%. So kind of vindicated for my little, obviously for my more value investing approach. But big move. I want to hold on to it. I mean, normally, I guess, you sell the rips and it's a pretty good rip, but I just don't see the story cooling off anytime soon. So if the markets are eventually going back to new highs, it's going to be stocks like this that are over 100. So I'm holding on to my Marvell. Been in it since the summer. It's actually been a great stock.
If 87.50 is your target, that's the pre-market high. Beyond that, there's no pain. There's nothing for anybody. No resistance. So, if you have a larger position and you're trying to get out, maybe you can do some scaling here. But right now, the only thing I can give you is that pre-market high, 87.50.
Wait, does Marvel have a dividend?
It might be
They
small.
do. It's small. They do have a small one.
Yeah,
Okay.
real small.
All right. Well, that qualifies them for value. No, it doesn't. I don't know. I'm making that up. Okay. So that's basically it. I mean, there was a couple more earnings, but none of them were super interesting. Like Smart Sheet. We don't really care about that. Let's move on to the title of the show. I made it DD. This is an interesting headline. Actually, the headline was predictable. The reaction is what's interesting here. DD is going to delist off the New York Stock Exchange. This was, if you've been following the story, it's not a total surprise. There have been several reports about this in the past couple of weeks and months. What is interesting, though, is the reaction here. And also because we don't really know how this is going to work. So the headline broke yesterday after hours, right? DD is going to delist on the NYSE. But again, we don't really know how. Are they going to get taken private? That would require like $40 billion of capital to do that. Are they going to list on the Hong Kong Stock Exchange and just do a conversion? Are they going to list on another stock exchange like in Europe? But who would have them? London wouldn't take that. What other stock exchange outside of China would take DD after this debacle? Probably no one. So what's likely here is either a buyout or they just list in Hong Kong / Shanghai and they just do a 1-to-1 conversion and you can just convert your shares and that's that. I can't really explain to you why the stock went to $9 this morning. It also seems dumb that it's at $7 now because the news isn't a surprise, and we're light on details. So I'm not really quite sure why it's moved.
Here's the concerning thing is that they tried to get listed on Hong Kong, but the Hong Kong exchange actually requires companies to make money before they're listed. So then they
Is
come
that the
over.
truth?
That's what I heard on CNBC.
Okay.
So if that's not
I know
true,
nothing about that.
yeah,
That's interesting though.
but they have more stringent require. Oh, we'll go list on the U.S. exchanges. So this is just a mess. I'll agree with Spencer on the pop over 9. When you're getting delisted, to me, that's bad news. I don't know why anybody. Once again, 4 a.m. traders. I don't know what you're thinking. I mean, I should put out 4 a.m. levels for these kind of things because there's like no reason to be buying this at 9. And I'll just give you, there's a bunch of monthly lows in here. Not that I'm buying it, but there's old time low is 718. And so if you feel like
You know what?
you need to own it at the old time low, go ahead.
I
Not
do
my
have
cup
an
of tea.
idea. I do have an idea as to why it could trade lower. And I just looked this up right now. DD looks like is a member of 13 U.S. listed ETFs. I don't know what if DD's delisting is going to cause it to get yanked out of some indexes. That could result in some forced selling. If it's going to go OTC, that could result in some forced selling if certain investors have rules that they can't own OTC traded stocks. That's maybe one explanation for why it could trade lower off this, but we don't really know anything yet. As far as if you own DD, what's going to happen to you? What's going to happen to your shares? I mean, you'll get you'll get some money back here, but it remains to be seen how. The pop was dumb. I guess the drop makes more sense to me than the pop, just because there could be some forced selling involved if they're going to delist, and you have certain hedge funds or whatever institutions that aren't allowed to own non-exchange traded stocks or whatever. But yeah. Anyway, so not a surprising story. Continuation of what we've seen, in frankly all of these Chinese U.S. listed Chinese stocks. Where we talked about Baba, Joel and I talked about JD yesterday. Joel, my buy the close, sell the open is not working in JD this morning. China just making new lows. K-Web making new lows today. So just to continue.
I don't want to own any of these China stocks. I sold the only one I had, which was Baba.
Yeah.
So no more investing in China for me until something changes over there.
Yep. Brutal. Oh, that K-Web is at $42 now. Yeesh. Okay, a couple more minutes before we'll start getting ready for the jobs number. Zillow. I haven't looked at Zillow in a couple weeks.
Guidance.
I kind of forgot about Zillow. I'll be honest with you.
I thought they kind of like kitchen sinked it with all that information, you
Yeah,
know?
yeah,
Yeah.
yeah. Anyway,
Wow,
Zillow's
bounce.
doing a buyback, a $750 million stock buyback that they announced this morning. And they actually, no, I'm sorry, it was announced last night. And in addition to that, I'm reading in the Pro now, they raised some guidance. Basically, they were like, Joel's right, kitchen sink, get all the bad news out at once. And now they're like getting back to normalcy here. So they actually raised their guidance last night and announced the buyback. So we're up here this morning off of those headlines. Interesting. Was that the bottom? Question mark, question mark, question mark.
Uh, well, if it gets above this pre-market high, and I think it has a chance to do it. It's only a buck away, 61.19. You're starting to, instead of buying on weakness all this time, like someone really honestly wanting to own this under $53. The last 6 out of 7 sessions, they were nibbling around there. Do they want to pay 60? I don't know. Does it want to break out above? If it gets above this pre-market high, I'll give you another target, 63.45. The longer it takes to take out that pre-market high, let's see. Top of yesterday's range is down at 55.41. If you're looking for a gap fill, but I don't think it's going to see. I don't think it's going to see the 63.45, and I don't think you're going to get it as cheap as 55.41 today.
Yeah, this is one. Oh, I know. We just spent 3 days or more saying don't buy growth stocks, and I'm not going to buy this, but this is one that I would at least like throw on a watch list somewhere
Sure.
because
Which one?
Zillow. I mean, just because it's like,
Yeah.
and you know what the whole thing showed? It showed a willingness to admit when you're wrong on the part of Zillow. They were like, "Yep, this iBuying thing, it ain't working for us. We're screwed up. Let's get out. Let's
Good
cut
point.
our losses and get out." And that's what they did.
Yeah,
And so props to them.
yeah,
No, mad props. Mad
yeah.
props.
I think so too.
Yeah. So cool. Okay, it's 8:27 here.
I got to
Yeah.
go trade this jobs number.
We got 3 minutes
Yeah,
until the November non-farm
going
payroll.
wide.
You know what? It could be a nothing muffin too.
That's
No, they're gonna see chop and volatility. I'm gonna fade everything. That's how I'm approaching this. Just fading every single move. We rip higher, I'm selling it. We dip lower, I'm buying it. Unless it's like a crazy number, I'm gonna be fading. Now, not fading for 10 cents. I think you're gonna rip like $1.50 in either direction on SPY. So 15 handles up, 15 handles down. That's where I'm looking.
Now,
all
now
right.
we don't. Now we don't even
I'm
need
going
to
to
do.
trade it right now. I'm canceling all
Okay.
my orders too because I don't want to get picked off by all
Joel,
these high
Joel,
frequency
part of
traders.
me is with Joel here. I wouldn't be shocked if this is just a nothing burger because no one knows, and here's why: no one knows what the numbers actually mean. Like for
I don't know what
example,
anything means anymore.
for example, the estimates are for the non-farm payrolls figure to be anywhere in the ballpark of like 550,000 to 573,000 for last month. If
I'm
the
going
number is way lighter than that, if it's 400,000 or if it's way above that, if it's 700,000, I don't even know what that is. That good or bad? Because on the one hand, more jobs added is generally considered a good thing, but you've also got to think about what it means for what the Fed could do. I don't know how to interpret this. You've also got the unemployment rate, which is expected to tick down. You got people saying it's not even about the jobs number; it's about the labor participation rate. So like, there's no consensus here as to I think what the number actually would mean for the market today. Whatever happens, if the market rallies off it, then it'll be obvious in hindsight, right? Whatever happens after the fact, but like going into it, I have no idea. I really don't. Like, we'll read you the numbers here, and Joel will narrate the market as it reacts in real time. But like, I'm I'm clueless.
All right, 829. What do we got? We got a pre-market high of 89. That's okay, but 93.75 was yesterday's high. That's the number you want to get to. For a super bullish day today, for me, we are closing above last Friday's close at 95.75. On the downside, if we get to 66.50, that's mid-range on the session. Let's see if you find buyers. Between 6650 and 4600, not much there. So let's see what the actual number. November jobs report imminent. What was that? Austin Goolsby? What's that guy's name?
I don't know.
Look at this. They got 8 people on there, and it's just me and Spencer. You tell us who
We don't
tell
need 8. We don't need 8 people.
No way.
Joe, we got me, you, we got our chat. That's all we need.
Okay.
Okay.
We're trying to pop,
Waiting for the
and
number.
we're dropping. Got a
Oh, you know what
little bit. People are jumping the gun.
you know what I should have done? Here we go. We got it. And it was light. 210,000 jobs added, non-farm payrolls added last month. Again, the estimate was in that 550 to 570,000 range, and so 210 compared to that mid to high 500 range. That's not ideal. Unemployment rate did tick lower, more than expected, 4.2% versus the 4.5% consensus. So unemployment, if you recall, prior to COVID was at, I don't even remember what, like a 12-year low. It was at like it was in the high threes, right? It was at 3.7 or 3.8. We're getting close to pre-COVID unemployment territory here. 4.2%, not that far off, but far fewer jobs added last month than we thought. It looks
There we
like
go. We're popping. We're popping.
October.
We just took out the high. Now we're getting interesting here. 93.75 was the high. We just took that. We went 95 bid. So right now, the bulls are in control. We got to keep an eye on 93.75. That was a high from yesterday's session. And what else we got moving on here? 95.5 is the high. Looks like the bulls have, you had a little bit of a dip, nowhere near mid range, nowhere near mid range on the session. That little dip didn't even leave the 45.80 handle. We took out yesterday's low. Now, what the bulls have to do is they got to hold this 93.50, poke our head over 4,600. There's got to be some buy stops in there. People just saying, oh, well, I'll get out if it goes above 4,600. But what is moving? What is moving with this? How are the banks reacting? Because what does this move for interest rates, right?
I don't know, Joel. I mean, Bitcoin just popped. Okay, so there's that.
It's still in its trading range. Still, let me get the pre-market chart up here. 24-hour market. JP Morgan's not showing you much. Man, banks are what's going up? Is it the tech? Come on, guys, give me some stocks that are going
I
up.
mean, yeah, the Qs are popping here, right? Apple just popped. All the tech
There we
stocks
go.
just
They're
popped.
buying the
Okay?
tech.
So, yeah, they're buying tech. Frankly, they're buying everything, right? Yeah, Patty stocks. They're buying PayPal too. They're buying all tech here.
Okay. Okay.
Even I was gonna say even Docusign and Asana, but not so much. But yeah, you got your Qs, you got your big tech, your Apple, your Microsoft. You're all they're all popping.
Yeah.
Bitcoin, all your risk on assets, growth assets are popping here. I guess the interpretation is weaker number means
Fed
continued
won't.
continued bazooka gun of
Yeah, but he came
yeah.
out. Pumpin' Powell came out and said he was pessimistic, Powell. So
No,
I
I
don't know.
know. This is why I don't know what to. This is why I have no idea. I still don't freaking know what
They
to.
cleared out the stops at 4,600, went to 4,602. So that's a good move. Right back at, the funny thing is with all, let me grab my sheet here. With all the movement this week, right? With all the up and down and all around. Last Friday's close was 95.75. So here we are trading within a whisker of that. So I'm still good. I mean, the jury's still out. That was a nice pop. We're holding that yesterday's high, 93.75. So as long as we hold that level, the bulls are still in control. Upside target based on a 9-day average trading range is up at 1750. I'm sure a lot of people would like to see that. And I'd have to adjust my I
Right.
would use where were we right before the number? I would use that as a potential sign of weakness. And I let's see where we are. I'm going to look at the 829 candle here. Now we're down on. Now there's. I hope Dennis waited to sell the rip because that was a pretty good rip. We lose the 93.50 at 829. We
Dennis is
close.
back. Dennis is back. It's been 3 minutes.
I kind of thought
Sold.
so.
I sold SPY at 4. I think I might have got the high tick almost.
Let me see.
459. I was up in the 459.70s.
It's been.
Let me see. I gotta change my chart. Did you
459.70s. I had some sales up there.
now? Did you put the orders out there, or did you hit a bid?
No, I had some in there.
Yeah.
How high did we get on SPY there? Your charts are all messed up.
No, they're not. That's a 1 minute.
I
It
can't even
just
tell what
got
that is.
to 58.48. How did you sell?
58.48. 59.79. Your SPY chart's all messed up. I'm telling you.
No, it's not.
We traded up to 59.79. I'm short. Like I could see, like the 59.
59.79.
Yeah, that
This is
chart's
a
wrong. I don't know what that
Yeah,
chart is. SPY.
59.80 was the high. Just
I got some
something-
off at 59.79.
Yeah.
I never get the high tick.
Yeah.
I don't know why your chart's wrong.
I don't know. That's weird.
59.80 you have for the high?
Yeah.
I got some off at the high tick almost. I never
Oh
get
man,
that.
maybe
That's
I'm
crazy.
gonna have to change one of my settings on this.
Joel,
I can't believe this.
Well,
you ain't fading, you ain't trading.
this is why Joel doesn't even look at the SPY for this reason.
Yeah, yeah.
But okay, so what? I guess we're not tapering. I don't know what this means. I'll be honest with
I know nothing.
but okay. I mean everything at the growth just popped and is now off the highs. I guess not really off the highs, a little bit off the highs. So anyway, I don't know.
What do you have? What do you have for a high in Apple?
What do I have? I have to zoom in here. I have a 50. No, I have 65.40.
Yeah.
All right.
Well, bring out the SPY chart again. Bring it up on that 4 thing. Let's see what the
I
high is
am.
there.
That's where it was.
No, it was a weird chart you had up.
No, he was a hell.
There's something wrong here with the SPY because it's not even moving right now.
Oh, that's weird.
Your
That's
SPY
so
chart's
weird.
messed up,
All
man.
right.
Something's wrong.
I'm gonna have to spend 2 hours on the phone with TradeStation now. That sounds like fun.
It does. You know what else sounds like fun? Talking to our guest. That's
okay. Let's do that.
Boom! What a segue. Mish Schneider, managing director at MarketGauge. It's been a while since we had her on. Too long, perhaps. Let's bring Mish on the show. Mish, welcome back.
Hello, fellas. How you doing?
We are confused. Well, what else is new? We're always confused here. But trying to make sense of this number. I don't know if you've 7 minutes should be enough time for you to decide what you think. So what do you think?
7 minutes in heaven?
Yeah.
Let's see. Let me step back a little bit because I think uber focusing on that number may be a little short-sighted compared to everything that's going on over the last several weeks. Number one is even before Black Friday, we started to see some risk off because I look at relationships, intermarket relationships. I look at how the long bonds are doing versus the S&P. Well, for a long time, the S&P was outperforming until a couple of weeks ago. I look at how the transportation sector is doing versus the S&P. For a long time, transportation was doing better than the S&P until a couple of weeks ago. That's risk off. Junk bonds was sort of flashing a warning even before that, in that bond brokers who come in to buy high yield debt companies, that's always the perfect risk on. Junk bonds were starting to go down pretty seriously. So then we had Black Friday, we had the big swoon, we had the Omicron scare, yada, 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 and we had Powell. Okay, so let's talk about Powell since that's related to the unemployment numbers. Powell is really good at talking at both sides of his mouth. So on one level, he said exactly what we saw today. He's concerned about the labor market, big concern. On the other level, he's concerned about inflation, not using that word transitory anymore. So he talked about speeding up the bond taper, which basically means less accommodation, but it doesn't mean that they're taking us off the juice, because he also didn't say he's going to raise rates. Forget about what all the other Fed members say. It's what Powell says that counts the most. So essentially, the signal he gave to the market this week, and the reason why we came back, is if things are doing well, we won't be as accommodative as we've been in the past, and we'll start to remove some of that bond buying. By the way, the balance sheet actually went up yesterday. And yet, at the same token, don't worry. We're worried about inflation, but we're way more worried about the economy, as they should. So this today proves exactly what his concerns are legitimate concerns. And that's why we're seeing the bounce in the market. So that's one major theory I think you have to keep in your mind here, is the market is so focused on these jobs reports. For that reason, But it was already concerns coming into this that inflation is still very much alive and well. And that's really, I think, where we're going to go, maybe stagflation next year. That's my number one theory.
Whoa, you said the stagflation word there. You said so much that I don't even know what to respond to. But let's start with that. You just ended on a low note there. Stagflation. No one likes to hear that. Although maybe we've already been in the stagflationary environment. I don't know.
Well, the deflation part really didn't get going until after we saw the nadir and COVID last year in 2020. The stagnating part, though, yeah, I mean, when have we had some real serious growth in the actual economy? I'm not talking about growth stocks. I'm talking about in the actual U.S. economy. If you look at, guys, my Modern Family, if you look at what the Russells have been doing, they haven't really done very much. They had that one little quick trip to new highs, but they've been sideways. Transportation looked like it was going to get going, then it backed off. Retail looked good for like a nanosecond, and now that's backed off. These are all the signs here that the economy, where are we going to get growth from? And I think that's the biggest concern. And obviously, people don't want to work. But I think there's another thing to look at here, which is going to sound terrible, but actually has a silver lining. And that is the credibility factor. Everything pretty much in our lives has lost credibility in terms of being investors. The government, not so credible. Politicians, not so credible. Scientists, not so credible. The media, not so credible. And on and on and on. Nothing really has major credibility except for one thing: retail investors. What they're buying, what they're putting their money in because they're so flush with cash, is the one credible thing that I think has really helped keep this market from completely collapsing. And that doesn't look like that's going away, at least anytime soon. What we've seen recently, though, is if the retail investors back off and we get a swoon like we saw on Friday and then again earlier this week, we can see those retail investors back up, but they're sitting there on the sidelines waiting. And at this point, so far, that's a good thing if you're an investor.
Well, a lot of the darling retail stocks are well off their highs here. I mean, you can look at AMC as your poster child, right? It just broke down a couple of days ago.
Well, I don't know if I would look at AMC as a poster. I would certainly say it's a poster child for the meme stocks, and it's where the Reddit crowd was. Okay. But I think, believe it or not, people have gotten smarter, which is encouraging. So they've moved away from some of those typical meme stocks, although I think GameStop is still up, and they're looking for things that have fallen apart, and they start coming in and buying based on other types of sensibilities, like, for example, electric cars. I mean, that whole explosion of Rivian that just happened, or metaverse type stocks like Roblox, which went up. Obviously cryptocurrencies, which during the market drop really still is doing very, very well. So,
okay, but all those things are also well off their highs too, right? Rivian was at 180, right?
Yes,
yeah,
no doubt. But relative to the actual market, compared to what the market did, they're actually still doing pretty well. I mean, when you have Bitcoin up here at 57, 58,000, considering a couple months ago it was still down around 40, that's still pretty good, even though it's not at 68. Can it get there? Absolutely.
All right. It's an interesting. Look. I hope the inflows keep coming, because all that means is people are dollar cost averaging. I mean, I think that's what it means, and that's good for life and for long term investing. So I hope the inflows keep on coming. But I acknowledge that at least it's been a pretty tough year for a lot of the darling. I mean, you named Roblox, which is kind of like the exception, but like a lot of the darling stocks of retail have had brutal years.
Absolutely, because the whole e-commerce thing it faded. I mean, and that's my point, is that if you really want to, and you guys are pretty active investors. I'm not talking about the 401k buy and hold holders. Sure. Yeah, some of them have great stocks in there. Obviously, they have Apple in their portfolio. They're looking pretty good. But I'm talking about people like us who trade, who like to buy, look for things at value, have a good risk, ride it, sell it, take some partial profit, maybe leave a tail or what have you. That's where I think the retail investment space has gotten actually evolved into something a little bit smarter. And that gives me some encouragement, not long term necessarily, But that's why I think we listen for these headlines. But essentially, if you think about it, like commodities days, right, Joel? Back in the old commodities days, the headlines were constant, but we traders, we almost didn't care. What we really looked for is price. We looked for a support level. We looked for volume coming in. We looked for inflow of orders from the big companies, depending on what commodity you were trading. And then we would go in and we would buy it or sell it, depending on what was going on. And that's what's going on now. So it's, to me, the whole game has changed, which I'm excited about.
We're on the line with Mish Schneider, managing director at MarketGauge. So you're talking about the retail investor, being more active or being a much bigger participant in the market. To me, that could be concerning because the retail investor only looks at the market one way, and they're always, that the majority of retail investors only look for the market to go up. So they look at every opportunity as a buy the dip opportunity. What you had on the close, I believe, on Wednesday, I think was just an absolute flushing of the retail investor down the toilet because these stocks, they weren't waiting for the margin calls the next morning. They were saying, hey, you don't have enough money. You send a check here in the next 5 minutes or wire money and you're out. So I'm not. I still think the institutions run this market. I still think that the big money runs this market. And if unless you can say the retail investor got smarter, but I think until they start looking at both sides of the market, that worries me because it. And if we go on past history, it's when the retail investor's been in. It's when been the major inflow of funds from that's been the top in the market. How do you combat that?
Well, I'm not going to disagree with you. I think you make some really good points. Absolutely. And we know, I mean, listen, I've been in this game for such a long time, and it sort of reminds me of the late 70s, early 80s in a sense, where all of a sudden everybody was flooding into the market to buy the things that were hot, like gold and silver back then, for example, just to give two examples, and the big pork belly thing. And and eventually we know what happened is a lot of those retail investors got burned. And I'm not saying that we won't see a good percentage share of retail investors who do get burned. But everything has changed about the game now anyway, because you can do commission-free trading, you can get in and out, you can do fractal ownership, and you can spread into so many more instruments, even though there's actually a whole lot less number of stocks than there were, say, several years ago. It's been halved. The level of other interests like micro caps and all these cryptocurrencies have sort of filled in some of that space. So yes, I'm not saying that's the only focus. I'm saying that's the one right now credible area because everything else has lost credibility. And in terms of the institutional investors, the retail investors did better than the institutional investors and have over for the last course of a year. But also, think about what I said in the very beginning when we first started talking. You still have to have an awareness of the macro. And that's why if they don't learn something about the simple things that we all know, how the S&P does relative as a benchmark to transportation, because let's face it, there's still a transportation index that tells us how goods are moved and demand is across the country. Retail, if they can't figure out whether or not brick and mortar is still moving. And of course, bonds and junk bonds, if they can't see what the bond traders are doing and that people are not necessarily looking at high yield, then eventually you'll have a situation where the sign was in for 2 weeks, retail investors kept it up for 2 weeks, and then whoosh, on Friday, everybody got burned, myself included. When I say burnt, I mean some of my stocks that have been sitting there sort of floundering. We got out before it got worse, and now we're looking to shop again, provided we hold up at these levels. They were crucial.
It's funny you just mentioned the Dow theory, which I hadn't thought about probably all year, probably in 2 years, right? Because I haven't needed to think about it, but it's funny how it does seem to come back and play. So Mish, just to be perfectly clear here, what does have your eye right now? What areas of the market do have your eye?
Well, for one, I really think that clean energy and this whole idea of EVs is hot and is going to be hot for a while. They just came out and said that unless companies and countries put in major investments into wind to solar to try to get to that 2050 goal of having total clean energy and lowering our carbon footprint. It's not going to happen. And I think that their countries are committed to that, including China. So I see that as a huge opportunity. Again, will anything hold up if the whole market cracks? No, but that would certainly be an area that I would be looking to buy the dip when things happen and have some kind of a core position. I also think that we may see a little bit of a sea change in terms of consumer discretionary, more into consumer staples, as we're looking at the possible inflation scenario continuing. And I like food commodities for that reason, because I think people aren't necessarily as focused as they should be. Sure, everybody complains that they go to the supermarket and everything costs more. I went to the supermarket yesterday, shelves were empty. So we still have obviously supply chain issues. People don't even want to work in these supermarkets anymore. So I think we're going to see more food rising. La Nina's here for 2022. So Mother Nature, no matter what you say, you can't control what happens there. So I'm looking at how the food commodity prices ultimately will affect everything else in the consumer. That's why I'm looking at staples. And then other trends that could possibly come up out of next year, I think, remain to be seen. But like I said, this disruptive technology from EVs and also from clean air, that could trickle in. I'm still looking at stocks like Palantir. How much cheaper are they going to go? And Fastly.
That's the $1 million question, Mish.
Exactly. But I'm hunting. And this is where
Yeah.
I'm a retail investor, but I'm a retail investor who is smart enough to know that you just don't keep buying on the way down,
Right.
but that you wait for some level of, a reversal, however that looks, whether you're a mean reversion trader, whether, you use momentum trades, et cetera, et cetera. So, this is the disruptive technology is good. Cathie Wood, though, is just a little bit off her game in terms of her prediction. It's not happening now. She keeps buying on the way down. That's not how we operate, but that doesn't mean that she's necessarily wrong. She's just, her timing is off.
What about gold? I'm sick of gold. I've been holding gold forever. I've had, I probably still at a profit. As I always say, it gets in the 1800 handle. I'm going to buy it. I'm going to sell it. And then it dips. I mean, is it just a trading range? Is it just dominated by by the commercials and the hedge funds? I mean, if it's not going to go up in a potentially inflationary environment, is it ever going to go up? Give me your thoughts on gold.
Well, I'm so glad you asked me about gold, because I actually haven't really traded gold much. I did trade a while back, and I actually been trading silver more than gold, and I'm watching that silver gold ratio, which for a while silver was outperforming gold, which is inflationary, and I like that as a old commodities trader. And then we got out of silver, and it's just been floundering, as we can see here, back down near the lows. It's interesting with gold. I think that I'm always watching it. I'm always hunting it. And I wouldn't necessarily say that I would forget about it completely. And I don't like the argument Bitcoin versus gold. I think that's just ridiculous. They're two completely different types of instruments that serve two purposes. But here's what I would say is that if you really want to know whether or not the Fed's going to get scared about inflation, you do have to watch the precious metals. I mean, Jerome Powell's been around the block for a long time. I'm sure he's looking at gold and silver and the gold miners and even steel. Copper had a big explosion and now has come off. And he's looking at them and going, all right, inflation, it's food, it's, gas, but that's come off. I mean, really, when you're talking about used car markets and housing market and rents and wage increase, those are inflationary concerns. But if you're thinking like him, he's saying, that's transitory, even though he had to roll back that word. It's when gold and silver start to really pick up that people have to worry. And that's why I don't think we've even seen the tip of the iceberg yet on what inflation can do as we're going into 2022, 2023, and 2024, particularly if the virus comes out where we need to add stimulus in any way or bail out industries like the airlines or the hotel industry, the entertainment industry, which is still really suffering. So,
all right, let's wrap things up here, Mish.
Yeah.
What would make you, I don't know if it's technical or fundamental, what would make you super bearish and what would make you super bullish?
We're talking market or gold?
The market.
Market.
The market. What would make me super bearish right now is if, and I'm going to go back to my Dow Jones, because that really tells you about the demand of consumers and how things are moving, is if transportation sector, we're looking at IYT, significantly breaks down under a 50-week moving average. It's been holding it for a very long time. That would be a reversal of trend from bullish to caution, and I would take that seriously.
Wait, real fast. 50 week or 50 day?
50 week.
50 week. Okay.
Yeah.
I'm just clarifying.
Yeah, and I think the 50 week comes in at around 153, 155. We bounced off of that this week.
Okay.
So that would be number one to make me bearish. The thing that would make me bullish is exactly the opposite. If that continues to hold, if the junk bonds don't crash from here, if the small caps can get back over its 50 week, which is at IWM at 222, then I think we're going to try another leg higher. And that's where I talk about these retail investors. Forget about the headlines. Just watch where the money is flowing. Watch price.
All right, Mish Schneider, Managing Director at MarketGauge. Mish, always a pleasure to have you on the show. Thanks for coming on today.
Thank you so much. You guys have a great weekend and a happy holiday.
Happy holidays to you too. All right, that was a long one, but I enjoyed that.
Good information there.
It's been too long since we've had Mish on the show. We have 4 minutes left before the end of the hour. Let's do some ticker time. Drop your tickers in the chat. We will take a look. See, Dennis, you doing okay over there?
Yeah, I'm okay. I just took a break because I'm not feeling 100%. We know that, so I'll try to do 3 minutes ticker time with you guys.
Oh man, okay. I hope. Well, yeah.
Mish is great though. I listened the whole time. I was even commenting in the chat. She's awesome.
We hope you feel better. Okay, here's I'm just gonna go quick from the chat. UCO from Hertz Scrambler. Let's start there.
Who wants to go first? Dennis, you want to go first? You want me to go first?
Well, that's just crude. So you're just
oh,
talking.
that's right. Okay.
All right,
yeah.
fine. All right, fair enough.
Just
right.
figure. Here, I'm just gonna do this real quick. Boom, crude. What's gonna happen? Are we gonna take back half of it? This is a big old move. Let's see, 84 to 62, 22. What's half of that? 11. Crude's got to get back to 72, 73 and hold. If I was long, I'd play to the upside 72, 73.
All right. Who just put this in there? Joe, pull up HD. Did you win your bet or not?
No, I did not, and I'm very upset.
I don't know. I thought you did.
Wait, I might have. Did I?
I thought you
no.
did. I don't recall us saying. I don't recall the bet being it had to hit 400 cents on the kisser. But if it
really?
is, I mean, I don't know.
Yeah, it is. It was 400. It's just a 400 handle.
Well, it got to 400.
It got to 400.22. Dennis, we'll let you be the judge on that.
I mean, yeah, Dennis, we had a bet, Joel and I, 400 versus 420 in Home Depot. What say you?
Well, it didn't hit the 400. So
yeah.
no.
Well, all right. Okay.
Who had the 400?
I did.
No, I did.
No. I don't even know which guy. You guys don't know which side of the bet you guys are on.
I had the bearish bet. You had the bullish bet.
Yeah, Joel makes so many bets he can't keep track of them.
No, right.
Dennis, what did I tell you about saying that stuff? I'm gonna talk to your mom.
I was the one that was playing defense just now. So the bounce benefited me. I called 400. I was the one that was playing. I called 420. I was the one playing.
Right, you're bullish.
Yeah, I was bullish. So, okay.
So someone asked about Home Depot.
Yeah,
Is that it? Is that why we went on this tangent?
Yes.
What do we get? This is important. What? This is easy. 408, 409. We hold it. A couple highs in the same area. 410. Got to get above 410 and a quarter. 410.70. Boom. You're going back to all-time highs. You fail here. 408, 409. You're going back to test the 400.
Oh, here's an interesting one. Look at Playboy, PLBY. This one has held up very nicely in the last few months.
It really has. Yeah. I don't know, but I can't buy anything that's high growth and high valuation. So
what is the valuation?
And I hate NFTs now too. So
you hate it all. What is the valuation here? 1.5 billion. Oh no, there's a market cap of.
I don't think they make money.
Forward PE they do. 62. All right, that's a little high.
This thing doesn't.
Kind of stock that's working in this environment, but it actually has held up very well. So
it has held up well. I would say these three pesky highs here until if it doesn't take out these sellers, this is called the 41 area. I think it's going to roll over and die like a pig if it doesn't.
And I'm going to go so I don't roll over and die here.
Oh,
so. On that note,
Take the rest of the day, please.
I am just, I'm hoping to be better for you guys Monday. We'll find the results of my COVID test. I am not feeling well at all.
All right. Feel better, Dennis, please. Seriously.
Have a great weekend, everyone.
Guys, if we can't get like a sympathy like for Dennis fighting through the last 3 days with a cold,
he's tough.
he's a
Can you imagine these guys on CNBC coming on when they're not feeling well like that?
Heck
That's
no.
unbelievable. All right, I got Sean Udall coming on at 9 o'clock. So
All right.
he's gonna have a few opinions as always. He did get bullish. It's a question of his timing on his bullishness, but I'm going to go over to Pre-Market Prep Plus, sign up for the event. Overwhelming response to the event. Thank you, everybody. And Spencer, I'm going to call you at 2 o'clock. Is that okay?
Yes.
Okay, everyone, have a great day.
I just dropped the link to the event that Joel referred to in the chat. It's pinned there. It's also in the description. It's a week from tomorrow, December 11th. Dennis, Joel, I'll be there. Mitch will be there. Last special event of the year. So, okay, I'm going to wrap. We're going to do live trading with Benzinga starting at 9:05 today, as per usual. So, Ryan, Zunaid, Mitch, I'll be there for a few. So, where are we at on the like front? We're at 160. Oh, gosh, guys. Oh, no, it didn't update. I'm sorry. So now it updated. We're at 379. Can we get to 500 likes in the next minute? I think we can. I mean, just do it for Dennis. Don't even do it for me. Don't even do it for Joel. Do it for Dennis. Say hi to Aaron Bree behind me. Anyway, thanks to our guest, Mish, Schneider. Thanks to all of you in our chat. As always, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. I will make the same call to action that I made yesterday. If you are a Robinhood user and you want some free Benzinga swag, here's what you have to do. You go on your Robinhood app. You send Robinhood support a message. You tell them how much you love Benzinga News. You want to see more Benzinga News in Robinhood. You take a screenshot of that message and you email that screenshot to shows@benzinga.com. Do not do what some people did, which is email us a blank screenshot or email us a screenshot of YouTube. I don't want a screenshot of YouTube. I see YouTube. Send me a screenshot of your message to Robinhood to the email up on the screen. We will send you some free swag. Our email, we have like a freaking 100 emails here we have to go through and respond to. So if you emailed us, we got it. We didn't respond to it yet, but we got it. I promise. And we will get you some swag. On that note, I'll see you guys over in live trading starting in a couple of minutes. Hit the like button, please, and let's go make some money today.